Good morning, traders. It is Monday, July 29th. Taking a look at the charts, we got the SP500 and we've got the 30-minute chart of regular trading hours on the left. We got the daily chart on the right. And more or less, we're getting in. This week's going to be probably a pretty volatile week in the market. We've got potential rate cuts. Lots of news coming out this week. It's going to move stocks. It's going to move the dollar. It's going to move precious metals. So it's going to be pretty wild. We might hit some targets. We might get stopped out. We'll just have to play it by ear and see how things unfold. But overall, let's take a look at the SP500. Over the last week or so, we got dipped down into oversold territory, and we've seen the market rip up. We ended up hitting our first profit target, and we've moved our stop back into our entry price, our break-even point, and the market continued to move higher on Friday. Overall, our short-term cycle shows we should continue to move up today, but there is some potential of a pullback in the next couple sessions based on just short-term cycles over the last few sessions. Now, if we look at the daily chart, you can see we got pretty good volatility. We got some big down days, big up days, big down days. We've had a nice 3-day rally. It's chopping around. These are some pretty wide range bars, and we are in this point here where this week we are going to see some continued big volatility. The big question is, do we pop up or do we drop down? It's going to just be see what happens with the rate and what goes forward. But overall, still bullish on the market. We're expecting higher prices. We got to stick with the trend until proven wrong, until it shows that it breaks down. And when it does, we'll be looking to short, much like we did last time. Right over here, we ended up we bought the dip, and then we ended up getting short and profited from that collapse. So that's what we're going to be looking for again, is when the market does roll over. I do feel like we're in this period time right now in the market where we're at the verge of a pretty big pullback. But again, some of the biggest moves happen right at the end of a trend. Right near the end, you get some of these biggest moves to the downside and then reversal. Same to the upside. Sometimes you get some of the biggest rallies followed by the biggest pullbacks and standout tops in the market. So that's kind of where we stand. Now, if we take a look at the dollar, I've been talking about the dollar ever since it got down. This was a 100% measured move. This collapse, this bounce, we got down to this level. Dollar still making a series of higher lows, and this three-wave, this ABC correction with a Fibonacci 100% measured move, we had a nice knee-jerk reaction bounce. It's formed a nice bull flag, and this 98 is the target we've been looking for. We're almost there. We're about 10 cents away. It's a previous significant high. It's also a whole number, 98. There'll be a lot of people saying if it gets to 98, I'm going to be looking to close or sell some US dollars. So we might run into some resistance here. Obviously, the rate cut could affect this as well. It's going to hit resistance. We could see the dollar pull back fairly sharply depending on the rate cut. We could see gold potentially rocket higher. It all depends how things are going to move. Again, it's news. We don't know how it's going to unfold, and it'll be most likely a surprise to the market. No one really knows which way it's going to go. Now, if we take a look, let's go over to gold real quick. Gold's been holding up in this pattern, had a quick little shakeout and a pop back down. It's still holding up really well. Again, it hasn't really popped and released to take off yet. It had that current run. This week could be a pretty wild week for gold. It could pull back down to this 1360 area, potentially down in here, 1380, somewhere in there would be a fairly significant support zone. Again, just let the market do its thing. If we take a look at silver, silver's had that nice run, expansion. It's been consolidating, and it looks like it's primed and ready for a further kind of pullback or consolidation. The size of this rally looks like it could consolidate for another week or so before potentially taking off. But again, this week will be a pretty big turning point in the market, depending on how the market perceives the rate cut, or if there is a rate cut. Looking over at gold miners, they've been pulling back, starting to fizzle out. We've talked about this. What goes straight up usually will fizzle back down. This was complete emotion-based kind of pop, and everyone more or less was piling in, getting ready, and chasing prices up. And usually you got to see this fizzle down. It is getting down to an oversold territory going forward here, and it's primed and ready. Now that we've seen some panic selling in the stock market, this is starting to get primed and ready for it to actually launch at any point here. The fact that we broke this low over here, and on the SP500, we actually saw um, some panic selling on on Thursday in the equities market, meaning people were ejecting out of their positions and moving out, and that's what we want to see is people panic out of the market. That's usually when a bottom starts to get put in. So miners are getting into a point here where they're oversold. If we take a look over at energies real quick, natural gas, we talked about it over here when we got down to this low. We're looking for some multi-week consolidation up to the 240, 250 area, potentially up to this 255. But overall, this summer we're expecting it to go all the way down to the $2 mark, which is down over here. We're still expecting a fade down. When it gets here later this summer, we could very easily see this being a very good long-term potential bottom in natural gas. The more this can bleed out and get down here, the better. I think if it gets down to this 205 area, it's going to be a screaming buy. It is tough to buy and hold natural gas. No, there aren't any good ETFs for it. They lose value over time, much like an option. But we could look to play a fairly strong bounce or potentially some natural gas stocks. But looking for it to get down to this 205, $2 per $2 level here. Let's move over to Bitcoin real quick. Is doing this nice consolidation. I do like the formation that it's getting. You get this nice run up, and now it's kind of consolidating. We had this parabolic move. Everyone was talking about it. It was back in the news, and that was a huge move, and it's kind of a blow off top, a lot like we saw in the last top around the 20,000 mark. Now it's fizzling out, coming back down, and this is what we want to see. The longer this can kind of trade sideways and start to flatten out, build some type of a base, could be a good opportunity to get in. But at this point, it's still looking pretty bearish. Short term, we've got a pullback, we had a bounce, we had the second half of that move, and now it's continuing to kind of fizzle out here. And if it breaks this low again, we're probably going to continue to drop down to this 8,000 mark. We'll be looking for some type of reversal pattern to potentially get out. There's going to be this falling trend line down here. If it starts to rally and break out, there's going to be a few key resistance areas on the chart that if it starts to work itself through here, it could be the start of another big run, and for all we know, it goes back up to 20,000 again. So we'll keep our eyes peeled, but right now it's in consolidation phase. It's in a downtrend. Longer term, it is still a big bull flag it is forming in the big picture. So we are looking to get long potentially with this ETF or this fund, this GBTC. This mimics the Bitcoin, so it's a way to trade it on the stock exchange versus trying to go buy the cryptocurrency. Anyways, that's really it for this morning, and we'll talk to you in a little bit. Take care. Bye-bye.